Hello, welcome everybody. I'm here today with Henry Meier. Welcome.
Thank you very much for having me.
Yeah, welcome everybody to the Credit Union Connection. And Henry of the law firm of Henry Meier will be discussing. We're going to talk about so many different things: the government shutdown and the CFPB, and maybe the 50-year mortgage if you're lucky. Um, so let's get started. Henry, tell us a little bit about the opening up of the government again after the very historically long shutdown, what that means for credit unions.
I think it's great news. And the interesting thing about credit unions, because of the way we're funded, the NCUA never had to close down. But but I still think we're going to see a couple of um, uh, things that are great. You're going to see the funding back up for the CDFIs. Um,
Mhm.
you're going to and you might so that's going to be extremely helpful. And then because they're done with the budget fight, you might see the agency more focused on some of the regulations that they might want to propose. So bottom line is I expect more happening now that the budget battle is behind us.
Yeah, yeah, for sure. And thank goodness. I mean, credit unions obviously stepped up, but that was awful for so many people. Yeah, that work for the government, work for contractors related to the government.
Well, it's always good to see how many credit unions helped out people who were affected. A lot of credit unions offered short-term loans to people and government or financial assistance to people who were affected by it, and that's always good to see. It's always good to see the industry stepping up.
We're also looking at the CFPB right now because they are not affected by this now signed continuing resolution. What's going on there?
Very interesting wrinkle on what's going on with the CFPB. As you noted, that because of the way they're funded, they were not subject to a government shutdown completely either, although some employees were apparently laid off as a result of the government shutdown. Now, on November 7th, we had a new twist to the drama that is the battle of the Trump administration to basically do away with the CFPB. The CFPB, through a motion to a court, where the court's hearing an appeal of from government employers who are saying that they're being shut down illegally. Well, the CFPB, through the court, filed a notice that, from its interpretation of the law, the CFPB will be out of funding on January 1st, and that money that they need to operate can only be appropriated through Congress. This really created some heads, and it could be a hugely significant development. If in fact, now here's why though. First of all, the basics under 5497 of the U.S. Code. The CFPB is funded through the combined earnings of the Federal Reserve System. Okay, and then we all know that on a quarterly or potentially yearly basis, the CFPB can get up to a certain it's capped, but can get up to a certain amount of money from the Federal Reserve System for its expenses. Now, the CFPB is taking the position that, as a matter of statutory interpretation, it is only entitled to that funding when the Federal Reserve System is running a profit. Okay. Their argument is that earnings mean profit. Therefore, who knew? I didn't know this until a couple of days ago. The Federal Reserve has actually been losing money, or at least not making a profit since 2022. Come January 1st, they're going to say there's no funding for the CFPB, and it's not subject to an um, emergency situation where, like, the air traffic controllers were made to work even though they weren't getting paid. CFPB is not covered by that, so the government is making it quite clear that, given its position, for all intents and purposes, the CFPB will be out of business in January 1st. Now they point out that this doesn't have to be the case. Under their interpretation of the statute, Congress has been put on notice of this issue. And if they want to, they can put forward an appropriation to fund the CFPB. So let's break this down even further. Um, this argument was first advanced in a few lawsuits last year, but it wasn't addressed. So notwithstanding the fact that this issue has never been analyzed by the court or considered by any court, the CFPB, through an opinion of the Justice Department, is now saying that based on our interpretation, the CFPB effectively needs congressional funding when the Federal Reserve is at a loss or has generated a loss for the year. Now, that may not be true. That remains to be seen. But we're going to have litigation over that issue. We'll know that the Supreme Court has signaled to the lower courts that they want the administration to be given a tremendous amount of deference when it seeks injunctions that allow it to continue with what it feels is its proper interpretation of the law. So it's quite possible that what you're going to see here is January 1st comes, the Trump administration says there's no more funding. They shut down. There's a court case immediately. One side seeks an injunction against the CFPB for not getting money from the Treasury, at which point you would have an argument as to whether or not an injunction should be imposed against the Trump administration, and then that would be appealed almost immediately. Ultimately, you have to allow for the possibility that, given the deference that they have shown to the Trump administration, you could have several months before this issue is resolved. So, then that would be amazing in itself. But so that you would have several months of the CFPB effectively not functioning. Now, another possibility, and I say this almost with a chuckle, is that Congress will step up and fund the CFPB.
That was gonna be my
year,
next question.
yeah, I theoretically that's possible. Who thinks that the funding of the CFPB will get through a Republican-controlled Congress and not be vetoed by President Trump in an election year? So really, what we're looking at is a situation where the CFPB continues to hold on to its position. This is going to end up in the courts, and we might end up with a sustained period at the very least until the legal issue gets resolved. Now, there's another possibility as well, which is that once the court or the courts hear the case on the merits, they decide that the CFPB is right as a matter of statutory interpretation. And if that was to happen, you could have a situation where going forward, the only way you're going to get funding for the CFPB is either through an appropriation or from excess earnings of the Federal Reserve System. The implications of this could be huge. For instance, we would be in uncharted territory. The CFPB does a lot that people don't even think about. There's something called the APR, which is the rate used to determine certain mortgage tripwires for regulation purposes. Okay, the CFPB is the entity that calculates that. Okay, and a lot of people use that for a lot of different reasons. The CFPB recently introduced two regulations, one dealing with the small business lending rule and the other dealing with open banking. Well, with the open banking proposal, what happens to those regulations? Do they just to those proposals? Do they just sit there, or and finally, and most importantly, what is the status of the existing laws and regulations, since the CFPB is given the statutory responsibility of enforcing the federal regulations in conjunction with the attorney generals?
And I mean, from what I understand, the Trump administration and President Trump specifically, they're not big fans of open banking. Is that correct? Is that your understanding? So they probably veto that if it or not veto
Well, no,
it, stop it.
That's a proposed regulation, and they basically conceded in court that under the Dodd-Frank Act, there does have to be an open banking regulation. What they argue, though, is that the CFPB's initial regulatory proposal was much more expansive and burdensome for the banks and credit unions than it had to be. So it has reissued it has started the process of reissuing regulations, which presumably are going to be much less burdensome in terms of having to comply and have an API for open banking purposes. Now,
Mhm.
the small banking regulation, small business lending rule is extremely interesting because that basically would impose what I call a HMDA-like requirement on the affected banks and credit unions for small business lending. Okay, you would have to you would have to say, okay, is this a minority business? If so, I'm going to collect various points of data about the demographics, the people involved in the loan for purposes of ultimately analyzing if there is a discriminatory intent behind in the business in the banking system with regard to small business lending. Now, clearly, this is something that the Trump administration um, is not going to support. Okay, but interesting enough, the CFPB is at least going through the process of putting this regulation out, and they might be again come forward with a regulation that is much less burdensome than the initial proposal. We'll have to see.
So the other thing I wanted to ask you about is that 50-year mortgage the FHFA floated recently, which apparently President Trump and the administration also came out displeased with that. But yeah, what is that?
That is an
Possible.
extremely that's interesting on several levels of political and the policy level, if you will. But the basic idea is the argument for it is that obviously the longer you make the mortgage, the cheaper the monthly payments. Now the problem with that is the more interest you have to pay on the lifetime of a loan. Um, so on Saturday night or Sunday, apparently the head of the FHFA pitched this idea to the president. He originally came out and said, "Yeah, I kind of like this idea." He tweeted in support of it, and then by Monday, the White House was shooting it down because it hadn't gone through any kind of a vetting process at all. Now,
Mm. You
the
mean
funny thing
Twitter's not
about
an
that is
appropriate vetting process?
they apparently the quotes I read were that they don't like putting proposals in front of the president that haven't been looked at by other staff ahead of time, which makes sense if that is in fact the process they use. Now,
Mm.
I did find when you were asking about this before, I did find it interesting people's reaction because for years now we've already had or authorized both credit unions and banks to give mortgages up to 40 years. And even under existing regulation, I don't know if any credit union has ever taken advantage of this or asked for it, but the NCUA could, on a case by case basis, under its regulations, permit even longer mortgages. Now, the reason I'm bringing this up is because 40 seems like an awful long time for me to have a mortgage. So, and we do that every day now. Or it's very common. Okay,
Mhm.
so it's interesting what the difference is between 40 and 50. That all of a sudden everyone agrees that 50 is over the line, and I agree with that. It's too much, but 40 is okay, which I find interesting. Um, More generally, one of the few things that Republicans, Democrats across the spectrum agree with is that housing is too expensive. It's
Mhm.
and when you see ideas like this floated, it does reflect the frustration of coming up with policies on the government level that can actually address the issue, as opposed to letting the free market work its way out over several years.
Mhm. Well, and I mean, there's also the idea of lowering the cost of housing, not building a bunch of McMansions, building starter homes for people that are affordable. But
Yeah,
yeah, I don't see that.
and even if you did that, that would take time. So, and
Mm.
on the state level in places like New York, you see a whole bunch of proposals like tax breaks or maybe rezoning, which is an interesting concept, but there's really very little in the end that government can do to address the issue. And we
Mhm.
have these incredibly unique dynamics where we now have high interest rates, whereas up until a few years ago we had low interest rates. So you have all these people with no incentive to sell their house because they don't want to be stuck with higher interest rates. And you have an increased number of people who want to buy a house. Um, but by keeping the houses off the market, one increases um, the price of the house, obviously, and
Right.
two, because of the interest rates, even if people are willing to pay the price, a lot of them won't be able to finance a house at this level. The one, so at a practical level, I think credit unions looking at this from a practical standpoint should be looking at their business model and saying, why aren't we doing or why don't we do more home equity lines of credit? Because you have a lot of people who are going to be staying in that house that's pretty much paid off and that can pull equity from that house if they were given the opportunity to. And another issue, which is very interesting, is are there things that credit unions can do to aid first-time home buyers. Is this the time to? Are there programs out there that would attract more members to your credit union by pointing out to the first-time home buyer that you feel their pain and we're willing to help to the extent we can?
Yeah, yeah. Hopefully something. And I think too, like the credit unions are an instrumentality of the federal government, at least federal charters are, and so it's like the perfect blend, I think, of public-private solutions to the problem, which I think is probably much better than the government taking everything on itself.
Yep. And this problem is not going to, everyone, it's interesting when this problem is going to end because it doesn't seem like we're anywhere near the end of this huge increase in stubborn housing market really right now.
Huge, huge
It's
increase.
huge.
um, all right, so you're a, veteran of the Credit Union Connection. Um, always give my guests the final thoughts. What would you like to close out with?
If even as the NCUA slows down its enforcement, the CFPB slows down its enforcement, these laws are still on the books, and someone's going to try to enforce them on, if not on the federal level, then the state level. So you do have a lot less pressure in terms of the day-to-day compliance and worry about that from a regulatory standpoint. You shouldn't um, get to the point though where you feel that this obligation you have to comply with these laws is somehow gone away. We have to see what has somehow ended and gone away.
Brilliant wisdom. Thank you, Henry. Appreciate it.
Thank you for having me.